I've been getting a lot of investor questions lately, so I've come up with this quick video to help you understand everything you need to know about investment properties. So in this video, we're gonna be covering the top 10 questions all about investor mortgages. If this is the first time you're checking out my channel, my name is Sean Uehara, sales manager with loanDepot, helping you finance your homes all across America. Whether you're purchasing, refinancing, downsizing, buying a rental, or even your first mortgage, we got you covered. Make sure to subscribe to my channel and hit the description below. It'll give you a link to even more information to help you get your mortgage right. So let's hop into the list. At number 10, what is an investor mortgage? An investor mortgage is basically you are buying a property to rent out to a tenant. Now, when we take a loan application up front, that's one of the questions that we're asking you as the borrower. What is your intent with the property? If you're gonna live in it, it's a primary residence. If you're gonna rent it out, it would be considered a rental property. Then you also have a vacation home, which for a lot of people, the most common thing that we see is people that are the snowbirds that live on the East Coast or in really extremely cold areas. They love buying properties on the West Coast here in Vegas, Phoenix, Arizona, where they like to frequent in the winter times. So that would be considered a second home or vacation property. Number 9, can I put less than 20% down on an investment property? The answer is no. The minimum is at least 20% down. But in order to get the best interest rate, you want to consider putting down at least 25 to 30% down when you purchase an investment property. The reason is there is a huge price break on the backside to every lender out there and the way they price their mortgages. So if you go from 20 to 25%, you're gonna see a big price break in your interest rate. You can even test this for an example. The next time that you're talking to a loan officer and you are buying an investment property, I would ask them to show you the difference between 20 and 25% so you can see the difference in how the rate will impact your cash flow and the overall ROI for your property. And number 8, what is the minimum credit score for an investment property? We can go as low as a 620 credit score, but that's a pretty low score when it comes to buying a rental property. You definitely want to have your score as high as possible. And remember, when a lender pre-qualifies you, they're going to run your file through Desktop Underwriter or Loan Prospector. This is Fannie Mae and Freddie Mac's version of their online underwriting system. The online underwriting system is going to tell you whether or not you can purchase a home. So make sure your lender is doing that up front so that way you have the peace of mind knowing that you can purchase your home. Number 7, can I live in my investment property? And the answer is yes. At some point in the future, yeah, if you wanted to move into the property, you certainly could. For example, I've got a house in Milwaukee, Wisconsin. And you know what? Currently, it's a rental. But let's just say in a few years, I decide I'm tired of Vegas, I want to go there and live there for maybe half the year. I could certainly move into that property. So there's no rule to say that you can't move into a rental property. However, remember, when we finance your loan up front, we do need to know the intent of what you plan to do with the mortgage. And number 6, how much will banks lend for investment properties? And that's simple. It really comes down to you as the client. Any lender is going to take a look at your credit. They're going to look at your income and your debt and everything else that we do on any other pre-approval. We want to make sure that you can qualify and you have the income to service the debt. So as long as you make the income, you've got the money to put down, and you've got the reserves in a checking, savings, or retirement account, you can purchase as many rental properties as you'd like. Number 5, how much is the down payment on a $300,000 home? Now remember, you can do as little as 20% down, that would be 60,000 bucks. But to get the best scenario possible, I always recommend 25% down. And 25% on 300,000 is 75,000 bucks. And number 4, can I get a 30-year mortgage on a rental property? The answer is yes. More often than not, you're gonna take a 30-year mortgage on your rental property. If you were to take a shorter term, whether that be a 20, 15, or a 10-year mortgage, you can certainly do that. But remember, the shorter the term, the higher your mortgage payment's gonna be. And depending on how much money you're getting on rent, you would probably want the cash flow. So that's why it's super important to have a good lender by your side so you can run all these different scenarios so you can figure out what's going to be best for you with your rental strategy. Number 3, Can I get 100% financing on a rental property? The answer is no. Back in the day, in 2007, before the crash happened, there were so many crazy programs out there that didn't require any funds to put down to buy property. And because of that, look what happened. The market fell apart because of subprime lending. So today, if you're looking to buy an investment property, the lender is gonna wanna see that you've got some skin in the game. And remember, you're looking at 20 to 25%. Now, there may be some gurus out there or people on social media that's gonna teach you how to house hack or do all these other crazy things. But if you're looking for traditional financing, you have to come in with some money in order to purchase a rental property. Number 2, how long do you have to live in a home in order to rent it out? Now, there is no set guideline that says you have to live in a home for X amount of months or years before you can rent it out. I've had clients that were in the military, they purchased a home, and then they got orders that they had to then get relocated, so they actually turned their home into a rental. But remember, the number one thing that a lender is gonna ask you is, what is the intent of the property? Now, if you are lying to your lender, saying that I'm gonna live in the home, but you're actually renting it out, that's fraud, and you shouldn't do that. You should actually stay away from doing that, unless you wanna go to jail. But if you moved into the home, you bought it as a primary residence, and now you decided maybe you got married or you had kids, and then you need a bigger property, you can certainly turn that home into a rental, your initial property, and purchase another primary residence. But remember, it has to make sense. This is one of the biggest issues that we're seeing right now in lending, is that many people bought homes and they are quickly wanting to then buy another primary residence. When you do something like that, the lender's gonna ask you for a letter of explanation. And if you don't have a good reason why, as to why you're leaving your initial home, turning it into a rental to buy another primary residence, that's probably not gonna happen. So you wanna make sure you get your ducks in a row if that's something you're looking to do. But remember, there isn't a hard timeline as to when you can turn it into a rental. It's just gotta make sense to the lender. And question number 1, can rental properties make you rich? My answer is yes. Real estate is probably the best vehicle to help you build wealth. Once you purchase a property, you can purchase other rentals, and then you start building up passive cash flow. We all played the game Monopoly growing up. And remember, every time you pass go, you collected 200 bucks. It's the same thing like owning a rental property. Every single month, as long as your tenant's paying rent, which is also another important factor, you are collecting money. And if every property that you own, you're collecting more and more income, it's gonna help create enough passive income that maybe you can quit your job. And now you can become a true real estate investor. So for myself, I truly believe in real estate, I believe in passive income, and I believe in owning as many rental properties as possible. And I can tell you a quick story. For all of you that live in these high cost of living in parts of the country, think about if your parents or grandparents would have bought property 30, 40, 50 years ago and rented it out. How much rent would you be making off of that home today? You'd be making a lot of money. Now think about what the properties that you bought today will be worth 30 years from now when maybe your kids are in your shoes. How much will rent be at that time? That's why I truly believe the more properties you can own today, it's gonna pay dividends in the future. Those are the top 10 questions that I've been getting all about investor mortgages. And if you like this video, don't forget to check out this playlist. It's gonna give you more information on how to get your mortgage right. My name is Sean Uehara. Thanks for watching. See you on the next one.